Oh man, a huge day for crypto. Today is the day we find out if the US will officially tumble into a recession. Yesterday we had Jerome Powell raising interest rates by 75 basis points. He denied that a recession is coming forward. He said we do not think a recession is coming. But we officially get the data today. How will Bitcoin respond? We're currently seeing Bitcoin sitting at 23,000. A nice rally yesterday in the price, taking Bitcoin up to 23,000. But what is next? Are we going to break through 24,000 and get that relief rally? Or are we going to come crashing back down as the GDP figure comes out? We're going to cover off a bunch of critical content here. So smash the like button. Don't forget to subscribe. As always, check out the links in the description to BYBIT and BitGet to get bonuses when you're trading. Now, as you can see, Bitcoin has been looking quite strong here. We've had higher lows here, which is really good, and a nice uptrend. But remember, this uptrend does not sustain unless we create that higher high above 24,000. So I am not long on Bitcoin for this relief rally up to maybe 28, 29, 30,000. Until we get a daily close above this 24 level. Until then, I'm actually worried about a potential bearish pattern and potentially a head and shoulders pattern forming here if we get rejected at this point. This is not what I want to see, and that could suggest prices back down here to the bottom and even testing 17,600. Now, what is the fundamental data to back up which direction we're going to be heading in? It is the it's the GDP figure that is coming out today. And if we take a look at a few forecasts, there are two types of forecast generally you can look at in order to see where is GDP going to head into. And the first one I'm going to show you is known as a dovish one. This is the St. Louis Fed. They're known to be a little bit dovish, i.e. they soften the blows. Now they're saying Q2 GDP was 4.1%, which is a huge growth. That's super in the green and a huge growth here. So they're showing that as 4.1. But then if you look at the much followed Atlanta Fed estimate, they're sitting here in the region of -1 and -2, so closer to -1, maybe -1.1, -1.2, that kind of range. Now remember, anything negative brings you officially into a recession, or so I thought, until earlier this week when the White House decided to change the definition of a recession. Take a listen.
Where we are today.
If things are going so great though, then why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Brian Deese said in 2008, of course, economists have a technical definition, which is of a recession, which is 2 consecutive quarters of negative growth.
I can tell you this.
Yesterday he said 2 negative quarters of GDP growth is not the technical definition of a recession.
It is
what
not.
changed?
It is not.
Why did he say that
it
was?
is not. I can speak to what he said yesterday in front of all of you, which is the last thing that you just repeated. There are many factors. Economic factors and indicators to consider, and I will say that the textbook definition of recession is not 2 negative quarters of GDP. We have a strong labor market. We have business.
So as you can see, it's all been messed up, and now you're seeing a bunch of politicized changes coming to the official definition of recession, which for many years that I spent in traditional finance was always 2 consecutive negative quarters of GDP, and we're in a recession. Either way, that's Biden playing whatever games he wants to play in the lead up to his midterms. But in terms of the market, I think the market is going to react. If we get a negative, don't be surprised to see if we see a sell-off. And the reason behind that is, let's take a look at Dixie, and that's the dollar index, and you're seeing dollar index get a nice bounce here. I'm sitting here on the 4-hourly chart at the moment, and what I want to point you to is a double bottom pattern, right? You're getting this double bottom type pattern here on the dollar index. And if this is indeed a double bottom, and it sets it up for a bigger move to the upside. Now, again, people will flock to the dollar if they're fearing a global slowdown, and the dollar index is inversely correlated to Bitcoin. So that could suggest Bitcoin could be tumbling to the downside. Now, as we stand, Bitcoin is sitting here flat on the day. And again, the question is, look at this. Are we going to curl over and come back down and miss that higher high, which is not great because we'll form that head and shoulders pattern I shared with you? Or can it continue to push on, get a breakthrough 24,000 and get a daily close above 24,000? Now, why do I keep talking about this daily close above 24,000? What's wrong with me? Well, let's pull out the daily EMA ribbon. And what I want to show you is, look where the daily EMA ribbon sits. You'll remember here, we got rejected exactly as we tried to close above 24,000. Now we've gone back down and we're trying again. If we can get the breakthrough, this is a nice uptrend, right? This would continue to be a nice uptrend. If it doesn't, we're then back into our bearish pattern, which we need to be cognizant of, okay? So that's really important that we try to get that close above our daily EMA ribbon sitting here at about 24,000. Now, technically, 23.5 is enough, but I just don't want to be wicked out. So I want to see a clean candle, a breaking through this level, and another green candle opening up, and then I can feel confident that, okay, maybe Bitcoin can get itself ready for a relief rally, okay? And again, what do I mean by relief rally? I'm saying a relief rally because we'd be silly to say anything other than the bears are in control. Okay, the bears are in control. This is a weekly chart I'm showing you right now. And even if we run up all the way up here to 29, 30,000, which is what I think the relief rally could be, there's no evidence to suggest we're going to run up to 64, 65. We have to take that as and when we get to this point to see what is the data showing. And if the data is showing that we're able to try break our weekly EMA, then we can start turning bullish in terms of running back to all-time highs. But for now, I don't want to get things confused. What I'm saying is if we get a clear break of 24,000 on daily, I'm happy to say, okay, maybe we can start working our way towards 30, but I'm not setting any price targets beyond there. Absolutely not. Your weekly EMA ribbon will be giving a lot of resistance at this level and sell pressure back to the downside. What else have we got to update you on? So the GDP figure is coming out at 8:30 my time. Sorry, that's your time, Eastern time, which will be 1:30 my time here in the UK. So 8:30 a.m. Eastern time before the close. Before the open. Also before the open, you've got a bunch of important earnings. Remember, Facebook missed earnings hugely yesterday, which will weigh on the Nasdaq. You've got Pfizer and MasterCard before the open. You've also got the GDP figure, like we just spoke about, and then after the close, you've got Apple, Amazon, and Intel all sharing earnings. What a huge week with loads of data coming out, and really, if we take a look at fear and greed index, that's climbed up to 32, and that's simply because Bitcoin ran to 23,000 yesterday, that the fear started to dissipate from the market. But if we look at the pre-market right now, you saw, well, yesterday, US markets closed with the Dow up 1.3, S&P up 2.6, and the Nasdaq roaring at 4%. But what's happened since then? Since then, Facebook missed shares, and their shares are declining. They have a big weighting on the Nasdaq, so very, very important. And we've now got the fear of this GDP figure coming out before the open. So you can see pre-market is much more tentative, with the Nasdaq falling 0.6, giving up some of the gains from yesterday, S&P doing the same, and a little bit on the Dow. So all attention being focused on that GDP figure. Let's find out what that comes in at and what that means for the wider market, and not to forget the company earnings. And now, what am I expecting? What are the key levels I'm expecting, and what do I think can happen in this market? Well, what I'm looking out for here in this market is, are we going to see what's going to happen once they take all this data into account? So a lot of people are saying, oh, is the GDP figure going to lead us to go green or red? I don't think it's as simple as that. Short-term traders will be trading that GDP figure and just saying, okay, what is the GDP figure and can we trade it? But the longer-term investors are going to take all of this data that we've received this week, a whole bunch of data, the FOMC rate hike, the comments Jerome Powell made, the GDP figure from today, all the company earnings, the projections they gave for future outlook. On the 29th of July, you're getting the PCE inflation report, which the Fed pays a lot of attention to as well. So a whole bunch of things going on. Not to forget, you've also got Janet Yellen with an unscheduled press conference today after the GDP figures. Who asked her to speak? Maybe she's going to try to soften the blow, or Joe Biden says, go, 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 say something like, change the definitions or something. So a whole load of stuff. And what's more important is, let this trading moment die down. If you're an experienced trader, go ahead and trade it. But in terms of your long-term portfolio, let it die down. And we're going to find out what is the direction we want to head into over the next few weeks, because the next FOMC meeting is not until September now, okay? And back into September 21. So you've got all of August and pretty much all of September for the markets to decide on a trend direction. And that's what's going to be key here. Is that direction going to be, yep, figures are good, we've looked at everything, we want to run back up to 30 on Bitcoin? Or they're going to say, all this data combined leaves me feeling a little bit nervous, we're going to channel here? Or is it, no, this is bad, this is going to get worse, we're going to go back to 17,600? Those are the things that are in play. And all that data is, by the end of today, once we've got it all, we're going to sit down, digest it all, and you'll see that from Monday, Tuesday onwards, the market's going to start choosing a direction to head into. Hope you guys enjoyed this video as always. Do check out OKX, links in description. Again, I want you guys to check out OKX. It's really important. I'm going to be talking about this a lot more because I want to start setting up a long-term strategy for you guys. So you guys know I use BYBIT and BitGet for my day-to-day trading, but I know a lot of you guys want to watch for the long-term. And the long-term portfolio is where the majority of my wealth is stored. So I want to make sure you guys are set up. And OKX is a really clever feature where we can dollar cost average in automatically on a bunch of different coins. So this is a game changer for me. I was waiting for this for so many years and no exchanges were offering this. So I'm super happy. And I will be setting that up and showing you guys a few different price strategies of how we can invest in some exciting narratives. Like, can we have a layer 1 pie? Can we have a metaverse pie? Can we have a gaming pie? And how do we set that up at the right times during the next bull market when things are getting ready to run? Hope you guys enjoyed this video. Smash up the like button and subscribe. Go watch this video here, and I'll see you in the next one.